Greetings everyone, Jake Bernstein here with the 2chimps.net Chimpcast for the week beginning the 7th of September. It is Sunday 4:56 p.m. in Santa Cruz, California. Whether you know it or not, the markets are open electronically on Monday, and they just opened for Monday's trading right now. We've got and you can see my screen, you can see that currently, and I'm going to bring it up on the screen here, the S&P is up 375 points after being down 2450 on a Friday. Let's take a look at the trends. This is my short-term chart of the S&P, showing 2 bars below the bottom of the moving average channel, which is a setup, which triggered a sell right over here. All profit targets would have been achieved. Resistance is now at the top of the moving average channel as of Friday, which would be, let me move this over, right over here. Hold on one second, please. Come on, cooperate. There we go. So that resistance level will be right here at the top of the channel, and that's what we're looking at to be sellers. However, remember, if you're a short-term trader, the trend remains down. If you're an intermediate-term trader, the trend is still up. Why do I say that? Even though we've had 2 complete consecutive bars below the bottom of the moving average channel, Williams, which is the blue line and the red line down here, has not confirmed by giving a sell trigger, which means that you want to go to the monthly chart and start being a buyer at monthly support. There are 2 ways to handle this situation. Number 1, don't catch the falling knife. Wait until you have daily buy triggers on some of your favorite stocks. Or number 2, go to the quarterly chart, which is ultra long term, and you can see what's happened there. We have definitely hit the bottom of the channel, and we are ready now to be buyers. Again, you can take the Warren Buffett approach, dollar cost average, and keep on buying, or you can take the sensible approach, which is to wait for buy triggers. Some of our favorite stocks for the longer term have hit monthly support and quarterly support, so we're positioned now to get ready for a move to the upside. Precious metals. Let's bring up the gold chart on the daily and see where we are there. And remember, our work is purely technical. We have no opinions. We simply have facts to report to you based on the methodology. So while we may feel intermediate to longer term that gold's going higher and that we may have inflation, that's really not what we're all about here at 2chimps.net. We're about facts and not fiction and not interpretation. Fact of the matter is that gold gave a buy trigger on the daily chart, 2 bars above the top of the channel, Williams above its moving average. Simply by moving below its moving average, Williams does not trigger a sell unless we have 2 bars below the bottom of the channel. Therefore, we conclude that this whole area here at or below the green line, which is moving average 8 periods of the low, which is the support level, and that market is in that support level right now. Let's take a look at crude oil. In fact, let's take a look at a couple of gold mining stocks, which is GDXJ is the best one for this purpose. And let's take a look at it. GDXJ has given sells, so there's interesting disparity here between gold and gold mining shares, because remember, this is the junior gold miners, so you're waiting for a buying opportunity here. There is none yet. We can make a case for bullish divergence in some of these gold mining shares, but be prepared, because as we've told you before, September, October is prime time for rallies in gold and silver, and some of the largest rallies over the shortest period of time have happened during this time of the year, so be careful. In other words, be careful about being short. One more we're going to look at, and that is the crude oil. And here's the crude oil futures chart. Crude oil futures not only gave us an excellent, outstanding buy on divergence, but has also given a buy on moving average channel. Therefore, our strategy would be to buy at support. If you're not trading futures, then consider some of the oil stocks. We like Marathon Oil, MRO. Let me show you the chart. And again, the way to do these trades is to wait for buy triggers. This is Marathon Oil, and you can see that we have not had any buy triggers yet. So remember, there's not always going to be a one-to-one relationship between the underlying commodity and the stock that trades for that commodity. So look at some of the oils. Another one we like, it's cheapy, is Sanchez Energy. I'll show you the chart. This is Sanchez, and again, you can see the same pattern, waiting for a trigger. So don't jump the gun. There has been a trigger on Sanchez on divergence. New low in price right over here. Without a new low in momentum right over here, which triggered a buy right over here. So actually Sanchez already is in buy mode on divergence. We hope you like this format to the summary that we give you. It's educational as well as informative. If you'd like to see me add things to this summary, this Chimpcast, please drop us a line. And remember, we have a 2 Chimps webinar coming up. Sign up and look at the link. Thanks a lot. See you next time. If you have any questions, send us an email.